the World Economic Forum in Switzerland has certainly been making headlines around the world with climate change back on the global agenda. And of course, we saw that comment coming through from Christine Lagarde, warning about the impact that climate change is going to have on us going forward, and very strong words from her. She's also had some strong words for those in the banking sector, saying that regulation is high on the agenda still and should remain top of mind, and that regulators should not come back when it comes to progress they've made in the banking sector. But that, of course, is that what's being said, and a lot of comments coming through from Jamie Dimon, the CEO at CEOs, basically one of the banking CEOs, basically saying that a lot of concern is misguided and saying that many don't understand bank earnings. With all that being said, we were talking about Davos, and we've earlier had the Ernst & Young head of EMEA on the show, and we also caught up with Ralph Mupita, CEO for emerging markets at Old Mutual, and he took us through what he's thinking right now in Davos.
There's still a sense that there's a two-speed economy where the developed markets are still struggling with growth. I mean, this time last year, the mood here was more about, how does Europe avert a crisis? Sovereign debt crisis was a big issue.
It was very pessimistic last
Absolutely, very pessimistic. But I think what the Europeans are dealing with now is to try and balance austerity and growth. So austerity measures have been in place in places like Italy and Spain. And if you look at the data coming out of Spain, it's tough medicine. Growth hasn't been coming through. So the issue for Europe is balancing the austerity and growth. Too much austerity kind of pulls back growth, and I think they're challenging with that. But on the developing economies, I think, particularly if you look at Latin America, the delegates here from Latin America and the Africans, for them it's all about growth and how do they unshackle the brakes to growth. So two-speed economy, I think, is a central theme.
And certainly the developing markets need to take the opportunity now, the gap with investors, to say they need to invest heavily into those territories that may offer additional risk, but with additional risk comes reward.
Absolutely. And I think the theme, again, both Latin America and Africa, is that infrastructure is the key brake on growth. And the fact that, road, rail, and even the soft infrastructure around governance is what's actually lacking to accelerate the growth in both those regions by anywhere between 2 to 3% extra beyond what is currently being achieved. And the trick there is going to be really about governments and the private sector finding ways to tap into long-term capital that can be used particularly to roll out the hard infrastructure that can accelerate growth in those emerging markets.
Absolutely, hard infrastructure being one of the key gaps identified. But again, globally, one of the key challenges that government and business leaders have to deal with is inequality and the trouble that stems from inequality. Obviously, we're dealing with that situation in South Africa at the moment, labour tensions between employers and employees running high. Your thoughts on how the private sector can unify with government to solve this ongoing crisis? And as I said, it's global.
Yes, I think that's a very important point, which is sometimes when we're in South Africa or in Johannesburg, we forget that some of our challenges are not unique to us. So the inequality issue is probably the big socio-economic theme that's coming out of here. And the focus has been across a couple of areas in the dialogues that I've followed. One is education. And the issue there isn't so much about the quantity of education, and a lot more kids coming into schools, but the quality, and how mobile telephony, mobile and connectivity is going to be able to be an accelerant to the quality of education. The cost of devices, the cost of telecommunications is going to increasingly go down. And because right now there are about 6 billion cell phones out there, only 2 billion of them are on 3G. Now if you could get about 2 or 3 more billion on 3G, and allow that to be an accelerant to improving education, I think that's one area of dealing with inequality.
Just another stat to throw in there, because I've just had a conversation with the Minister of Communication and Technology in Nigeria, and we were talking about the fact that 87% of African consumers do not have access to the internet at this point. You must feel like moving from the financial services sector into the telecom sector.
No. I mean, for us, even in financial services, this is a big shift and trend that is going to kind of democratize financial services, I believe. I think if you go to markets like Nigeria and in Kenya, you're going to find Android devices, phones which are unlocked, cost $50 US, and the moment you can get 3G or better quality data transmission, I think that will pretty much put the internet in the pockets of individuals all across.
And that will lead the education revolution.
It will lead the education revolution. It will take finance even further. Right now, you've got money transfer as the main mechanism through mobile, but I think there's going to be a much more democratization of finance with the link between mobility and the cost of data coming down.
What are investors asking you here at Davos, given that you are obviously one of the leaders in the financial industry in South Africa?
I think what they
And Africa.
Absolutely. I mean, the key thing they want to know is that there is policy certainty in South Africa.
Do you believe there is policy certainty?
There is policy certainty that is emerging. The big deal, and I'm sure others will agree to this, is that government, business and labor really do have to come together and create and foster a greater level of trust, and then simply work on the national development plan. We don't need any more plans or articulations or forums or lekotlas. What we really need to do is to take that national development plan and ask all the social partners exactly what they can do. And from the financial services, for us, the issue of infrastructure and bringing along long-term capital to unlock some of those bottlenecks is something that we can actually stand up to and say to the government, let's find solutions in this space. So investors are saying, we want to see the mood of the South Africans, and the 120...
And the mood is not pretty right now in terms of what they're seeing on the international stage. I mean,
Absolutely.
We're just hot after Marikana, we've got the Anglo-Plat situation unfolding, and more turmoil in the labour environment.
I mean, they understand that South Africa is going through its own challenges, but I think the first way to deal and to make progress is to acknowledge where your challenges are. And I think we've done that in the way that we've communicated with investors here, talking to them about our challenges either on the labour front in the mining area, but then coming back and saying that we've got real plans to actually tackle these issues. Some of them are structural, and we're going to have to give on both sides. And I think this, what they're doing is kind of a wait and see. So it's actually up to us South Africans to actually deal with some of those perceptions. And I think government, business and labour are going to be up to it. We certainly, business, are up to it.
Youth unemployment has been reiterated over and over again as high on the global agenda. There's no silver bullet. I've debated this with both our politicians across the African continent and business heads. What do you think? Where do we start with youth unemployment and resolving that situation? Because it's the gap between the haves and the have-nots that's going to continue to create the instability we're seeing at the moment.
I think the first thing is absolute growth. You've got to get the growth going. Because growth creates the employment prospects and then lifts people out of that. I think we also have to now find partnerships on specific initiatives, because I think the youth unemployment issue has to be dissected even further. It is, I think, the female youth unemployed are actually a big challenge for us in South Africa. And we're going to have to find ways, business and government, and I think the issues around finding some sort of wage subsidy, which has been mooted in the past, that's actually one of these things that we have to actually bring forward and deal with. And I know that there are different points of view across the social partners in South Africa, but if we don't solve that particular problem, the problem just gets bigger. So I think that's one way we have to actually deal with it and find ways to make our economy, in certain parts of the economy, particularly the agro-based and tourism and those kind of sectors, more labor intensive so we can absorb labor. Growth that doesn't bring on jobs in South Africa is actually problematic. It just causes social tensions to go up.